how money is created in a capitalist economy, and who creates money uh, in the capitalist, especially in the mature capitalist economy. And what we are going to say is not controversial. That's why we are not going to read this paper, but I've just you know link this paper. So if people want to read it, it is from the bank. It is written by people from the Bank of England. So I'm just going to go through some basic theses or point about how money is created in a capitalist economy. Okay, and who creates, especially who creates money in the capitalist economy. Okay. So first thing is money is basically created in a capitalist society. Firstly, we should say that money is of two types: capitalist money and non-capitalist money. And there are a lot of misconceptions about the role of money in modern economy. First thing to understand is capitalist money is totally different from non-capitalist money, which has existed in most of the human history. So capitalist money is something new. At least its dominance is something very new, only a few hundred years old. Non-capitalist money is basically a medium of exchange. But in capitalist money, it's not primarily a medium of exchange. Capitalist money is a money in search of itself. So, like any other thing in capitalism, and money is pure capital in the sense that this capitalist money, it is not connected to anything physical in its pure form anyway. So the basic difference between capitalist and non-capitalist money is that non-capitalist money is a medium of exchange. On the other hand, capitalist money, the primary purpose is to multiply itself. It's a money in search of itself. Okay, we'll talk about this at some other time, but let's see how this money is created in the modern, and who creates the money. Okay, the first question is, who creates the money? Well, let's keep it. Who creates the money in capitalist system? Who creates the money? And the quick and straightforward answer is, in capitalism, money is created by the banking system. So the banking system creates the non-currency money. So it's the banking system which creates money. So the next question is, and it creates money out of nothing basically, as I'll see. or as people say, out of thin air. Okay, so how does it do it? That's the second question. How does the banking system create money? I guess before that we should ask a prior question: what does banking system consist in? So basically, banking system consists of central banks, for example, in Pakistan it's called a state bank. In America it's called Federal Reserve, I think. In England it's called the Bank of England. And the deposit taking institutions. These are the normal banks and non-bank financial intermediaries. So that's the banking system. Now, third question is how the banking system creates the money. So banking money is created by the banking system through the interaction of the processes of central bank and deposit taking institution. Now, first, how does the central bank create money? Now, important thing is central bank and deposit taking institutions or normal create this money. All non-currency money the money which is printed in the printing presses in the form of debt by central bank as well as by deposit taking institutions or commercial banks. So it's important to understand that money creation is intimately linked to debt creation. This money is created as a credit money. So debt creation is not just something negative in capitalist system, which it can get rid of. Debt creation is central to the capitalist economy because without debt creation, you can't create money. So if the demand for debt or credit is lowered, then the amount of money created and circulated in the market is lowered, and that lowers the volume of production and the volume of accommodation. Volume of accumulation, etc. So it affects the whole system. Now let's say one more thing, and then we'll stop here and continue with it next time. The central bank create money through state banks create money through certain market operations, for example, by selling treasury bills, for example. And this increases the reserves of the banks which buy them. And deposit banks, and they are the main so deposit bank create money through their credit operations. So they collect household savings, mainly household savings, also corporate savings, but mainly the bone of that is household saving from all over the country, and then give part of it, a large part of it, to, as commercial loans, for example. And through the rules of double entry accounting system, they create money this way. So, for example, they are collected $100 and they are required, for example, to keep $10 in reserve and allowed to give $90 for loan. Then that $90 is added to this, so now they have $190. So they on the basis of $100 they were able to create $90 totally out of thin air. So that's how deposit taking institution create money. And we'll stop here, but next time we'll look at the role of the central bank in this, because a Wikipedia article says that in most modern economies, money creation is controlled by the central banks. Money creation I just talked about is controlled by the central banks, which is true in a sense, in a formal sense, but also formal sense, but false in reality. We'll discuss this, but false in the sense that obviously banking system requires central banks to create it and to sustain it. But in mature capitalist economies, central bank basically is an instrument of the deposit taking institution. So scheduled banks, so deposit taking institutions. So we'll discuss that in the next